Inflation or deflation? That's the question. Some money analysts are staking their reputation on one side or the other, either suggesting that we're going into hyperinflation because of all the Fed's money printing, or that commodities like gold are about to go into a tailspin because inflation concerns are dead wrong. And we've got two of the leading contenders for both sides of this position. Fox Business's Cody Willard and Euro-Pacific Capital Investment Consultant and Communications Director Andrew Schiff are here to stake their claim. Now, I want to go to Mr. Willard first, if you don't mind, Andrew, because it wasn't long ago when you and I were together on the same set saying, there's no way we're not going to have hyperinflation with all the money that the Fed's been printing. What changed your mind?
I'm not saying we're not going to have hyperinflation, but you've got to differentiate hyperinflation in the things that you need to live on. That's food, clothing, the things that you get by every day on. Most commodities included in there. But gold, housing, stocks, we have seen these, at least housing and stocks, are already in a major deflationary cycle. Gold is next. The things that you own are in a deflationary cycle. The things you have to buy are in an inflationary cycle.
All right. Well, you've totally confused me, but let's keep it on gold to keep it simple.
Gold is going to $500
You think gold, which is now, what, about $930 or something an ounce, you think it's going where?
Below $500.
Andrew, you buy it?
We'll take that. We talked about it earlier. I'll take the other end of that trade. But
literally, you probably are.
We
right?
are. Yes, we are. And but just you said you were a little confused, and let's try to keep this simple.
Yeah.
Because inflation, in the end, is a very simple thing. I mean,
that's what Milton Friedman told us.
Unfortunately, we don't live in a magic world. I would prefer it if it were magic, because then things would be fairly easy. But we actually, in this world, it costs $1 to print $1. And if it didn't cost $1 to print $1, we'd have no reason for an economy. We'd just print as much money as we had, and we all could, play our, do our origami and play bongos or whatever. But, the government, the monetary base, which is the hockey stick, which everyone sees, the amount of money being created is off the charts right now. Of course, now Cody is saying that money's not going out into the economy. It's stuck in the banks, making good for the losses that we all know about. But they've introduced this money. The money will eventually get out there, even if it's.
That's the assumption that I think you're missing.
No, hold on. Before we get there, let's keep it on gold for a second. So where do you think gold is going?
Well, gold, when inflation shows up, and we believe it's certainly going to show up, and gold has always been the money of choice, the asset class of choice that people go to when inflation.
So where's it going? 2,000?
Well, we think certainly. I mean, the inflation-adjusted gold from back in, if you adjust the 1981 price of gold, it's up to $2,000 or $2,100 an ounce. We think that 2,000 is certainly a reasonable place for it.
1,500 might be the low end.
Oh, well, obviously there's a lot of resistance right now at 1,000, but we think it's going to go
Cody, you're
higher
not
than
the only
1,000.
one who's saying this. I've been talking to Steve Forbes about this for a while. David Malpass, the former chief economist for Bear Stearns. What they say is essentially that, yes, the Fed has been printing a lot of money, but there was so much debt in the banks, there's so much space to fill in the coffers of the banks, that all that cash is going in to fill. It's like the banks are a dry sponge.
Exactly.
And the cash is all that money that's filling up those sponges, and there's still a long way to go, and the money is going to stay in those banks, and it's not going to contribute to inflation in the economy. That's what you're saying.
In many ways, in some sense, the money doesn't even stay in the banks because it simply disappears. The banks are insolvent. They still own tens of trillions of dollars of worthless insurance that they bought from companies like AIG and from each other, none of which can actually, there's no money to meet all of the losses and the real estate and the insurance that they've said they've bought. That is the problem. No matter how much money we print for them, they still have to recapitalize.
But it's not just Andrew. I mean, you got people like Mark Spitznagel, the guy who came up with the Black Swan theory. We won't go into what the Black Swan was, but he's staking his reputation on inflation coming up.
David, you remember,
the kind that you say is not going to happen.
Do you remember we were on this show back when oil was at $120, $130 a barrel, and I told you it was going to $30 a barrel?
You were right on that mark.
People thought I was crazy.
You were right on that mark. I didn't. Look, you were right on that.
It's not just the banks. The government has a $2 trillion deficit this year. That money is just not going to the banks. With their stimulus programs and everything else, that money is going to go, and certainly through policy changes, the government's going to ensure that that cash gets into the economy, quote unquote. So that money's going to be out there. It's going to be chasing a diminished supply of goods, because in a recession, our output capacity is dropping like a stone, because businesses are shutting down, people are cutting back, and there's going to be more money chasing fewer goods. You don't have to be Einstein to figure out what's going to happen? Higher prices.
I would just push back that they're going to have to sell their gold and other assets because the money, they are going to be suffering. So you sell the things you own in order to buy the things you need. That's the vicious cycle.
People are going to see prices go up and they're going to be clamoring for gold.
Andrew, is there anything other than gold that you would buy given your scenario, believing the hyperinflation?
Certainly anything that's anything commodities related or real stuff is something that we're going to favor because those things retain value. I mean, gold always has a special...
Food commodities? What about that?
Well, real estate, certainly there was a bubble in real estate, which we're still working through, and we don't think we've hit bottom in the real estate. So that's problematic. But certainly, if you look at some of the other commodities, they took huge hits in 2008. Yes, they were probably overbought in 2008. They came down 60, 70%, but they're bouncing up from now. I would imagine that those things are good to own. But gold has a special relationship. Gold's always been considered money.
I think one thing that all three of us would agree on is that interest rates will be much higher this time next year than they are today. I think the 10-year.
But wait a minute. You and I talked about this. When in history have interest rates gone up without inflation going up?
There have been 3 to 5 year periods throughout the last 70 years, most recently in the 70s, where you have a disconnect from gold and interest rates. They do not always move in tandem, certainly not in the intermediate term, and I think it's a terrible assumption to take the fact that the money supply is increasing, at least conceptually, because the government is printing money, and trickle that down 4 or 5 derivatives and say, I got to be long gold.
Right now, prices should be falling, not just for real estate and stocks, because look what we've gone through. Look at the bubbles that we've pricked. Look at the unemployment. There should be falling prices because demand and
aren't they? Most things that we own are falling prices. Real estate,
but not the things that we buy. Food's not going down. I mean, education's not going down. Healthcare's not going down. These prices should be coming down. The only reason they're not is because the government is replacing all the destructive demand.
But Andrew, we still haven't seen the kind of hyperinflation that you and Peter Schiff, your brother, and others have been calling for.
No, we haven't. I mean,
is going to come.
Again, inflation is the expansion of the money supply, not necessarily rising prices. We think that will come. Right now,
when
the money that's sitting in the banks, covering up these losses, is introduced to the larger economy. That's one trigger. The other trigger, of course, is when the United States loses its ability to sell its debt overseas. Right now, as long as people show up to buy our treasuries,
you think that's going to happen, Cody?
I do, and I do think that before the end of this year, we will start to see 5, 6, even close to double-digit inflation.
So we are hurting our currency by what we're doing.
We are destroying the value of our currency relative to many things in this world, but I don't think relative to gold.
Would you hedge any of your bets with gold, though?
I'm not making bets on...
Maybe 5% of it, as Toby Smith suggests?
I'm not making bets that gold is going to crash. I was going to start buying it, and I've decided I'm not. I'm just trying to figure out how to save the money, the value of the money that I've earned. I don't want to return on my capital at this point.
So what's your best bet about how to do that?
I'm actually trying to figure out the best way to bet on higher interest rates. I'm looking at the TNX. I'm looking at some very complicated futures things. I've not made the move yet because there's a lot of homework. The government has destroyed my ability to just save my money. That's all I want to do.
By the way, very quickly, what kind of gold should we buy? Should we buy physical gold with which you have to pay a premium of $100, $200 an ounce, or what?
Well, for small investors, we would think the ETFs, the gold ETFs, are fine. I mean, we have faith in the GLD's ability to meet all its obligations. For very large investors, if you want to be safe, then certainly a mixture of gold certificates and actual physical gold is probably a way to go.
But you do have to pay a premium per ounce.
Yeah, you do. But, everything good comes with a premium.
All right,
but I'm keeping it simple. I'm going with the sparkly stuff.
Thank you very much, guys. We'll come back to this debate in another 6 months.
In a year when it's at $500 an ounce.
Yeah, we'll see if that happens. Coming up on deck, the polls show Americans do not like government involvement in business.